After 40A2, we are coming back because this is a very important section. I didn't want to lose out of that. So 40A applies to all assessees, 40B applies to partnership firms, and 40BA applies to AOPBY. Now, 40AI, 40AI, mind you, which section we are talking about? Please understand. 40AI, all of them may not be in the same section wise, but just try to remember this. These are at least section wise. Any interest, royalty, fees, technical fees, or other similar expenses payable outside India, only if it's being paid outside India, or in India to a non-resident, not being a company, or to a foreign company on which tax has not been deducted, or after deduction has not been paid during the previous year, or in the subsequent year before the due date of filing the return, then what happens will not be allowed as deduction. For example, if FTS, fees for technical service, is coming under here, is being paid for 5 lakhs to a person outside India, then TDS has to be deducted only in these items, not all, royalty, interest like that. TDS has to be deducted, and TDS has to be deducted if you are not deducted before March, it has to be deducted before the due date of deducted and paid before the due date of filing the return. Otherwise, this expenditure will be disallowed, not come as expenditure. Right. However, if it is paid in the subsequent year, that is after the due date, he could pay before the due date of filing the return, he could pay. But it is paid after the due date of filing the return, then what happens in the year in which it is paid? For example, now we are talking about 1920. What is the due date of filing? They have extended to 30th November due date. So before 30th November, if he has not paid that amount, he has deducted and not paid the TDS to the government account, then what will happen? It will be not available as deduction. But subsequently, he has paid on 31/1/2021. Then this 1920 it will be disallowed. 1920 it will be disallowed. But in 2021, it will be allowed because he has already paid that. He is already paid. Already paid. So therefore, I hope you understand what is the provision relating to TDS, because TDS is just like employees' contribution, but there will be no employees' contribution. It will be deducted from the salary or whatever is the head of it, whatever is the payment made, and paid to the government. And that person can claim it as a deduction. So I'm not going to that. We have TDS separate chapter. But here, what is important is that TDS is not complied with, then it will be disallowed. What will be disallowed? The expenditure will be disallowed. But it is, this section is relating only to payable outside India or to an Indian or non-resident only. But it is not for local. But just wait, what happens here? Next one. Any salary, interest, commission of brokerage, rent, royalty, provision fees of fees, etc. for technical service of payable to a resident, or amounts payable to a resident contractor or a contractor of which tax is deductible, tax has not been deducted. In a case where tax was deductible and was deducted during the previous year and not paid on or before the due date, then what happens? 30% of such expenditure. So the difference between this is, here they are saying 100%. Here it is 30% only, because problem is here local payments are more. No, everybody will be paying. So the section is the same. Only difference is the items. Here salary is also included. Commission brokerage is included, which is not there. Rent is included here. There it is not there. Royalty and professional fees is both places. Technical fees both places. Rest is same. Only these ones are new items for resident. Paid to a resident, you and me. Here it's a non-resident. It will be non-resident payment. Here's you and me. Therefore, in that case, again, if it is not paid before the due date of filing the return, then in that case, 30% of the amount will be disallowed, not the entire amount. For example, here we said 5 lakhs was the amount, right? So that entire amount will be deducted here in the first case. Here it will not be, only 1 lakh 50 will be disallowed. Again, if it is paid subsequently, maybe he may get, but I have to check that section. I think they have removed that benefit. They have removed that benefit. Here it is available because they have reduced the limit, right? So they say that once you have paid 30%, then you cannot claim it back again later on. Now, similar to that, there are other sections which are next one, IB, any consideration paid or payable to a non-resident for a specified service on which equalization levy is deductible under section chapter of Finance Act 2016. Such levy has not been deducted or after deduction has been paid on or before the beginning of month one, however, it shall be allowed on the year of payment. The equalization levy is another sort of payment made on which TDS has to be deducted. If it is not done, it will be disallowed. What is equalization? I'm not getting into that because it's a separate chapter. See, chapter 8 of the Finance Act 2016. Next, any amount paid on account of any charge, rate or tax charge on the profits and gains. Like for example, when you pay a tax, advance tax, or any balance tax that you pay, you cannot claim it as an expenditure. It will be disallowed. So in the P&L account, if you have income tax, this will not be allowed as expenditure. It is added back. So your profit cannot be lowered because of income tax. It will be added back. Similarly, there are other items which are coming under this, which is any sum paid on account of wealth tax, like income tax, wealth tax, same. It will not be allowed as expenditure. Any payment made under the head salary payable outside India. Now that is why I am saying in the first case when we saw here, if you look at it, interest, this is paid outside India, right? Now see why interest is not, salary is not included here, because there is a separate section to cover salary. That's why it is not included here. There is a separate section to cover salaries paid to non-residents or outside India. So that is why if you look at it, any payment chargeable under that salary paid outside India on which tax has not been paid or deducted already covered separately. Therefore, in the first clause it is not there. The first clause, it is not there. Similarly, any payment to PF or other funds establish the benefit of employees unless the SC has made effective arrangement to secure the tax shall be deducted at source from any payments from such fund which is chargeable tax. If the company is running the PF itself, then at the end of the period or something, the amount has to be paid to the employee. When they pay, TDS has to be deducted. That is what they say. I'm not getting into detail because it will all confuse you more than anything if I try to explain too much. Now, any tax actually paid by the employer on perquisites. Again, we saw perquisite is paid, tax on perquisite, now tax on perquisite is an obligation of whose obligation is it? Venus, whose obligation is it to pay tax on the perquisite? The employer's obligation or employee's obligation? Venus, is the tax to be paid by on perquisite received by the employee a obligation of the employee or the employer?
Employer.
Employer. Perquisite is earned by whom?
Employee.
Then whose liability it is to pay tax on that? Now you calculate it.
Employee.
No, when you calculate a salary heading, you got perquisite, right? as an income. So on that only you tax calculated. Who was paying? The employee is paying. But the employer is saying, no, 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 don't worry. I will, pay tax on your this thing. Then that will also become part of your obligation. The employee met by the employer, it will be also added. But that amount paid by the employer will not be available as an expenditure for the employer. That will not be available as an expenditure for the employer. Here also it will be added in the hands of the employee because it's an obligation of the employee met by the employer. Tax has to be paid by whom? By the employee himself. But employer is saying, don't worry, I will pay. Fine, that's okay, no problem. That's between you. But the employee's hands also to be taxed. Not only that, in the employer's hands, it will not be allowed as expenditure. It will be disallowed. That is what is this whole section. Now, 40B we have briefly discussed. That is up to 12% only salary interest will be allowed as deduction in the hands of the partnership firm. Salary also will be allowed only up to a certain limits. I'm not going into detail of that, but there are certain limits beyond which so this is the partnership firm. These are the partners. Now partners are saying, give me at the rate of 18% interest. There's no problem, it can be paid, but in the computation of the firm, only 12% will be deducted as expenditure, 18% will not be deducted. So that is the basic. If anything more, it will be added. So there is a restriction. Then 40BA assessment firms, you don't have to now for the time being go that it's not there for you. So let us move forward a little bit. 40A, this we have already covered just now. This also we have covered. Disallowance of gratuity is very simple. 40A7, deduction on account of provision of gratuity shall be allowed when the amount of gratuity has actually been payable. When it is actually payable, when it actually becomes payable during the year, when the provision has been made by way of contribution to approved superannuation, only then it will be allowed. So that means when it is actually paid, you will get it. Plus, if you are making a provision, it will be allowed only if it's a contribution to approved gratuity fund, and approved gratuity fund is controlled by 43B, nothing else. So gratuity, if actually paid, will be available, no problem. But if it is payable, then it will be only available for approved gratuity fund subject to control of 43B. Other things will not be available. Deduction, the non-statutory, this also we have seen under, when we did salary, some part of it, disallowance in case of contribution, not statutory fund. If you remember the chart first in the salary for PF, we saw that whether it is available as deduction for the employer also. So only sums contributed by the SSC towards approved gratuity fund, recognized product fund, or an approved superannuation shall be allowed as deduction. Any contribution made by the employer to an unapproved or unrecognized product fund will not be available as deduction. Now finally, the 43B has come. 43B, what is it saying? 43B is saying certain expenditures are allowed. Certain expenditures are allowed as deduction only if they are actually paid during the previous year. However, if the assessee follows mercantile system, following payments are claimed on due basis. That is, provision has been made for these items at the year end, and provided the payments for the same has been made within the stipulated period given below. Now, what is the stipulated time period? I have told you already several times that within the due date of filing the due date of furnishing the return. Now, mind you, it doesn't mean that the date of filing the return, the due date. What are the due dates normally? You've got two due dates. One is tax audit, which covered coming under tax audit of this thing, 30th September. Other cases, it is 31st July. Now, this year, all this has been extended, so that extended date will be considered. If it's not, this will be the date. You may file at your convenience, it's not a problem. But here, the time allowed is again only up to these periods. This is the due date of filing the return. Mind you, this comes when only if you have made a provision in the books. For what? And this 43B is not applicable for everything. Like salary payment, there's no problem, it's not controlled. What is controlled are these items: tax, duty, cess, or fee by whatever name called, tax, duty, cess, or fee by whatever name called, any sum payable to the SC as an employer by way of contribution to recognized provident fund and all that. Also, we have seen employers' contribution to provident fund, employers' contribution to PFP. That 1,000 rupees example we saw a little while ago, that same thing. This is the employer's contribution, or to gratuity fund or ESA or any other fund. Any sum payable to an employee as bonus or commission. Again, there also we saw 43B, bonus and commission. Any sum payable by the SC as interest, even under 36(1)(3), we saw this. This is 36(1)(2). Right? This is 36(1)(4). All these are sections we've already seen. They're all, we have talked about this. Now, any sum payable by the SC as interest on any loan or advance from scheduled bank in accordance with terms and conditions of the given such loan or advance, including forfeit bank. So, any interest paid to bank also will come. Any sum payable by the SC as an employer in view of any leave at the credit of, that is leave encashment. Leave encashment also will get covered. Then last one, this is a new one that has been added some last year or something. Any sum payable by the SC to Indian Railways for use of railway assets, that has also been included under 43B. But apart from that, there are a lot of expenses which you can provide and not pay, still you will get deduction. These they are restricted. You should know the items that are coming here under 43B, nothing else. But again, one more thing is that if you don't pay now, later on as and when you pay, you will get deduction. Now, note number one. Payment is not paid before the relevant due date. If payment is not made before the relevant, date mentioned, no deduction shall be allowed in respect of the outstanding liability while determining the business income. Deduction can, however, be claimed in the year of payment. Deduction in respect of aforesaid sum, if allowed in computing of an earlier on an accrual basis, same will not be again allowed as deduction on a payment basis. Twice you cannot get deduction. So the idea of 43B is very simple. All these items covered, you should have, if you are provided for it, it will be allowed as deduction only and only if it is paid before the due date of filing the return. So